All right, good morning, everybody, and welcome to the Pro Trader webinar today, August 18th, with Jack. You guys probably know Jack. He has been doing some fantastic work over here on our Discord channel. Jack, big fan of Bookmap, and he won the Blue Jacket competition, I think first or second, maybe the second time we held it. And then he's been just really creating some great work over in Discord, great content, and I know that many of you over in the Discord channel already know him. So let me give a little bit of a background here. Jack is entirely self-funded trader who began his market journey in the early 2000s. Upon moving to graduate school in 2013, Jack utilized his undergrad background in mathematical analytics, leading to volatility and price models. These models have anchored Jack's trading since then, and he's leveraged level 2 and time and sales data in a variety of markets. Macro fundamentals and market structure help frame Jack's market bias, including futures, mega caps, tech, or options and hedging strategies. I have, whoops, that's incorrect. This is the correct information here. Let me just fix that right away. Sorry about that.
It's all right. John's a great guy.
Yeah. Absolutely. So the links here we have for Jack. We have his Twitter handle and Reddit as well if you want to reach out to him. So let me go over the disclosures and then turn it over to Jack. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's turn it over to Jack. Let me get his screen up here and let him take it away.
Good morning. Looks like the screen is going, so we've got that. What's going on, Ahmed? So as Bruce mentioned, we are both in the Discord channel and in YouTube. Feel free to ask questions in either. If you're trying to find out where it is in the Discord, you can see over here, special events. It's kind of in the English Trader section. You can ask questions there. You can also ask questions, like I said, in the YouTube. If you want to ask a private question and you don't want everybody to know your question necessarily, you can ask me. Just send me a DM on Discord. That's fine. I'll be answering pretty much any kinds of questions. As we kind of get into things, we're at basically my favorite part of the day, and that's the first 30 minutes of trading. We get the opening range. That's what I define as the opening range. Everybody kind of has their own take on what the opening range is. I personally like the first 30 minutes. Coming into today, I had a couple of different opportunities on how I could take today's price action or today's webinar. I could have gone with a more formal kind of like slide approach where I just sit here and bore you to death with slides, or I could rely on today being kind of a decent day with monthly options expiration and kind of go with a more organic presentation. So if you have questions, you have comments, please ask those questions. Please ask anything you want to know about, whether it's directly about Bookmap, something on my charts, or just about some trades that I do in general. Feel free. It's not going to bother me at all. Kind of coming into today, we saw a pretty healthy sell-off yesterday as we exited the day, and then that sell-off kind of continued as we progressed into the sorry, hold on one second. That kind of progressed as we moved forward in the ETH session. We sold off another 30 points yesterday or overnight. Now for me, as you saw before, I look at volatility and pricing models, and that's just kind of a weird way of saying I look at the way volatility interacts in the market, and that kind of gauges and shapes my perspective coming into each day or into each cycle. And what I mean by cycle is that monthly cycle that we're currently in. Some of my trading that I do kind of primarily goes around macro fundamentals and that market structure. And I take that market structure from the options complex as a whole. And we can actually see what the options complex prices in on any given day by looking at an options chain. And this can be incredibly important. If we take a look at these numbers, this is the IV percent that the market's pricing in. And having those numbers allows us to get the relative expected move in a given day. And right now, the ES market is expected to move about 26 to 27 points. Now, that's not every time accurate. It's about 68% of the time accurate, which is a common distribution. If it was normally distributed, we would expect it to be accurate 60% of the, or 70% of the time, roughly. And that's about what you get with the expected implied volatility in the market. And I use this to kind of gauge what I think. And with volatility being high coming into the day, I was expecting a compression in volatility as we started the day. I was expecting us to push back to those overnight levels and maybe go back towards what is set as the put wall today. So if we take a look at the start of the market, you kind of see we get an initial impulse down from where we were, a sell-off of about 3 points, and then we get that push up. And that was really what I was looking for right off the rip. I really wanted to see something like that. If we kind of go more into the micro, you can see that we've got heavy buyer influence, and then on the pullback, very little seller influence. You can see a little bit of an imbalance here as we push a little forward there. And as we did that, I'm looking at volatility. I want to see what volatility is doing. And you can do that in a number of ways. Primarily, we use the VIX. Volatility is generally going to tell you what's happening in the market. You have two options, really. You have the VIX alone, but more recently, we've gotten the VIX 1D. And the VIX 1D is based on the same calculation that the VIX is. However, it looks at an overlap of basically 1 day. As the end of today progresses on, it will start to look more at tomorrow and what the option complex is pricing in there. And you'll get your volatility numbers from there. Both of those numbers kind of tell me what the market's expecting and how I should proceed. If volatility is compressing, I'm looking for more long style trading. If we're already high in elevated IV, again, I'm looking for IV to compress from those levels. 18 is a lot of volatility in the VIX right now compared to where we've been. Most of you probably know we've been in the 13, 14 handles for several days, several weeks actually. So the pop in 18 with the consistent down moves with OPEX, I was leaning long on the start there, as I mentioned. And we get exactly that. We get a push up and we get our key gamma levels right here, the put wall and the combo strike levels. These are the areas of highest gamma. And then we get a nice pullback. And this pullback allowed for another entry, or if you were conservative and you didn't necessarily take an entry here. You're looking for a little bit of confluence here. And if you zoom in a little bit, you can see you do get a little bit of that exhaustion down there. And that's what that green line is. You can see that sellers came in, they are lower volume relatively, but then just kind of disappeared as this liquidity kind of builds up. And as this liquidity builds up, you can see the market kind of rejecting away. And this kind of gave me a clue that I continue wanting to be long when able. And I'm looking for those kinds of concepts right now. Similarly, looking at liquidity in the market as a whole right now, you really need to look at this area right here. Let's change these colors up real quick. And you can see that this liquidity right here is in the market. And this entered as soon as we pulled off of that area. So if you did go long from the VWAP area, which is a very common trading technique, and you are using that order flow style, you can see that you do have significant buying delta. You are seeing buying volume come into the market. And at that specific time, our volume pressure indications from Market Pulse were showing that buying. Everything was screaming buying at that case. And you could look at a potential target at that upper liquidity range. And that's really what I was looking at for a second entry on today's kind of push higher. And then what we got when we cleared out, we didn't get any follow through. We didn't hold the level. We fell back within these key levels right here. And at that point, I was kind of looking to be flat. You get a kind of a triple bottom pattern here, multi-bottom pattern. And so I was looking at these areas, waiting for these and a little push off of them to kind of take my final profits out of the trade that I was in. And that allowed me to kind of get out. Now we did get a little push higher. We did get that resolution higher, but again, we got the same kind of small volume at the extreme ends, and we didn't get any follow through from there. So at that point, I was really looking flat, and we were kind of setting up for today's stream. Now, as we kind of push through a little bit further, you can see that most of our moves are really correlated with the NASDAQ, and that's what this blue dashed line is on my charts. This is a correlation tracker to the NQ. And we can look at it, zoom out to the 5-minute here. And let's take a look at the NQ, 835 to 840. And you can see those same patterns overlap in the ES chart. It's going to re-scroll me. But you can see these same bottoms as we go. And this just allows you to keep track of both markets. I found that both markets are heavily correlated because of the underlyings within them. This has kind of given me a unique perspective on that kind of trading. If NASDAQ's selling off, the S&Ps are likely going to follow in one way or another. There is that high level of correlation. And I look for that as a confluence in my trading. And I utilize market pulls pretty heavily for that, especially with volume pressure and volume pressure imbalance. So as you can see, we kind of got that topping pattern here. We did come up and touch this liquidity, and we did push a little higher. But this put wall is very magnetic. There is a lot of options concentration in that area. And as VIX started to expand, as volatility started to expand, we did get that push lower. And you can see that as we get this push lower, this liquidity is starting to exit the market. So are they serious about being sellers and buyers, or are they entering and exiting the market looking to just kind of push price in a direction? And right now, it looks like they're not really active participants in the market. And so that's what I'm treating them as right now. So if we come back to those levels, I'm not treating this like it's going to be active liquidity, because every time we've come to it before, it's kind of left the market. And this is a kind of a holdover style from trading with the dome or trading with footprint. You'll often see liquidity enter and exit the market, especially in the price ladder. And this happens in all markets. And when you see that, that can be an indication of intent. And that intent helps you formulate what you're looking for. So if they're not willing to be buyers and we get a sell-off, I'm not looking to step in front of that. I'm not looking to get long at that spot because that liquidity hasn't shown any respect for the market. And as you can see, we're kind of just bouncing right now into this little combo level, this gamma level from our market analysis. And we just can't quite make it up. But again, if we take a look at volatility, it'll give us some insight into what's going on. And you can see that volatility is compressing. You see we did get that initial pop. VIX 1D is delayed in TradingView, but you can see that volatility is compressing. And if it is compressing, we know that the value of those options in those long positions is losing value. And as those options lose value, that hedging flow isn't necessarily needed to drive the market as much. And market makers can let go of some of that hedging flow. They can buy back some of it, in this case, in a negative gamma environment. And as time progresses, the same thing somewhat applies. If volatility doesn't pick up and those options don't continue to carry premium, then those options will start to decay in value. And as those options start to decay in value, we'll see market makers also continue to buy. So another confluence today is if we see volatility compress going into this OPEX and it being a Friday, we could potentially see a little bit of a rally as we progress through the markets. right now we do have a little bit of a sell-off. Are we coming back to this liquidity? And this will give us a good idea of whether or not this liquidity is going to interact in the markets. And as you can see, we got a little bit of a push off of VWAP, but we are on relatively low volume. And we're not really seeing any follow through on the offer. Nobody's coming down, stepping down to kind of counter any aggression that comes from the buy side. And we're not really seeing that very much right now. This liquidity is building up here. And we do have a chance, and it does get interacted with. Now, our sellers going to continue to be aggressive and push through and hold the levels, and then kind of push down into that next gamma level at 43.55, or are they going to reject? And it looks like because of the way order flow was and that lower volume, there was no follow through. And without the follow through, you get the imbalance as all that selling pressure kind of leaves the market. And now you saw the liquidity right there pop up. 531 contracts popped up right there, and the market immediately went back to it. So there is an appetite for selling as long as they see liquidity in the book, and that's what they're looking for there. And a continuation down into that gamma level, which we talked about just a second ago, that combo level, and we can see that there. We do see the offer filling up now. So now there is a little bit of a conviction there, and we are reaching that overnight low level, and we are reaching this opening range low. Didn't mark it. There we go. For those that have seen my charts often, you will know that I mark the opening range with that kind of yellowish line. I often look at the midline as well. That is a major line for me throughout trading. And it makes sense if we kind of go over midlines. Does anybody know why midlines are kind of important in the opening range? Does anybody have any ideas about that? You can post that in chat while we kind of go over this. Now, one of the things we've also got down here is that overnight area. That was an area of interest. London did push down to that level. Are they going to continue trying to push down into that level? Are we going to continue to see that expansion in volatility? And it looks like we got considerable amount of market participation on the buy side here. There is market participation, people jumping in the liquidity in the order book here. Give me 1 second. Let me manage this. There we go.
Jack, I have a few questions for you.
Yeah, what's up, Bruce?
So the VWAP there, did you anchor that at the beginning of the session, cash session, or did you?
So I have it set in VWAP settings to automatically reset at 8:30 at the open.
Okay.
I only really care about the cash open, the RTH open, and the reason is over the years, one thing that I've noticed, everything that the ETH does, the RTH, the US market, is just a toddler about it. Comes in, kicks over all the train sets and all the toys, and undoes everything that ETH does almost every single day. And really what we saw right at the open there in the first 30 minutes was almost that. We pushed off right from the get-go all the way back to the overnight midline, basically the halfway of the entire range of the overnight session. That push was, what is that? That's 22 points, 22, 23 points, which is almost the entire range that we were talking about with volatility as a whole. The reason I look at the opening range in general, one of the biggest reasons I look at it is because of what it shows us with market participation. Let me go in here and let me do something real quick. Now, if you think about the opening range, what you see in order flow in general with that kind of concept is that the market pushed in one direction, and once it got to a point, a lot of market participation showed up in counter aggression. So if the market pushed lower, in this case, we opened slightly lower, we saw a lot of buying pressure into the market right there. That tells us market participation, tells us interest at that level. At the top end, we got to that top end level and we saw a lot of seller participation. If you look here you can see exactly that. As soon as we got to this level, we swept into it. We immediately had an imbalance. We had a lot of selling pressure. You can see that in the volume delta. And we just rejected all the way back to our key levels here, our gamma strikes. So one of the reasons that I look at that opening range is because it gives me that flow overall. It gives me that understanding of where the market is kind of aggressing as a whole. And the reason why I use the opening range primarily over the initial balance is that the initial balance looks at the first hour, and the opening range gets you that first 30 minutes of really large volume. And we've seen after that little chunk, since then, we've kind of had some lower volume. We've had some volume drop off. Once we got down to this key level here, we did see market participation pick up, but we really see a drop off in volume. And so I've kind of transitioned to more of an approach looking at that opening range because of the volume numbers, because I want to see what the market is doing from that aspect. And Eloise, yeah, it is the first 30 minutes. Yeah, it is basically half an IB if you want to think of it that way. And there's a lot of statistics around initial balance, and I still use initial balance often in my trading. I just rely on that opening range. Now, I look at the midline because if you think about what's happening with order flow, if you go from one extreme to another extreme, you've set expectations of participation. And what a midline shows you is that's essentially where the market found a balance between both aggressions. And what you'll see is a lot of times you'll get some confluence as you get there. You might oscillate around these areas, as I kind of get my magic pen. You might oscillate around these areas and then get a push off. Then you'll get a rejection back and you might oscillate back around. A lot of times you'll get something even more interesting as a downtrend. You'll get this kind of impulse downtrend, a push through, and a support here. And if you're expecting a support here, you'll have an entry to get short in the market. Or conversely, if you're going long in the market, you're looking at the impulse here. And a lot of times you'll see me post trades that are very similar to that. And I look at those as those are kind of my bread and butter order flow trades. I'm looking at a trend developing, us crossing a line that I'm interested in, a key level, whether that's the opening range or a gamma level where I know market participation is supposed to be, and then support off of that level. Now, in this particular case, we've interacted around this put wall very often, this gamma level, as we kind of look back here. You can see the amount of volume we had here. You can see the amount of volume we had in the midline there. And as we've kind of come back into this balance again, we're getting that same kind of market participation over here as well. This is congestion. And congestion is hard to trade because you don't want to take a breakout long here because it did reject pretty hard. And you can't really be confident because you can see we broke out here, right? Let's go ahead and draw that in red. You can see we broke out there, but we didn't have any continuation. There was liquidity in the book. There was market participation. You can see the buy side aggression, but we didn't get any of that follow through that we really would want to see. We didn't get any of that continuation initially. So it didn't really give us a great entry. Also, if you take a look, this move is very sharp. This is a very, very large move in a very short period of time for the level of move that we would expect. We had all of this chop here, a sudden impulse down and a sudden rejection higher. This tells me that there is a little bit of an imbalance potentially here. There might not be order flow kind of continuing in that direction as we're looking. And that's kind of what I want to see is I want to see continuation of trend. I want to be trading with trends, looking at my key levels. And as you can see here, if we'd entered a trade, we'd just be going sideways right now. Now, there's nothing wrong with going sideways. Sideways isn't losing money, but it's not making money. And if you get a large sell-off in an indice product, such as an Apple or an Amazon or something like that, that's an underlying there, that can influence a large part of your trading as a whole. That can influence the way the market is. if we had a news event or something came out with Apple and you're just trading sideways, well, Apple has one of the largest market caps in the world. If it loses a dollar or two very quickly due to a binary event or something coming up, that's going to tank the indice a little bit. You're going to see a reaction in the indice for it. So I don't like to enter consolidation because you don't know what every product in the indice is going to be doing at a given time. So kind of right now, I'd be sitting on my hands. I'm just kind of looking at the way things are developing. We can see an interesting exhaustion level here. We can zoom into that. You see a little bit of exhaustion here, lack of buying. And that lack of buying is rewarded with a little bit of selling as it kind of pulled back into that VWAP point of control area. And it pushed down to that midline.
Jack,
and that's kind of what we want to see. Go ahead.
Jack, what's the blue line that you have there?
That is the NASDAQ correlation.
Oh, got you.
Like I said, I really like correlated markets. I really look at market pulse to give me some of that correlation. As you can see, the NASDAQ actually had higher pressure there initially than the ES market. And you saw that sharp move in the NASDAQ and then the sharp move in the E-mini market. So NASDAQ can be a leader in those violent moves, and it can kind of give you that indication. And with the market pulse add-on, you can see quite a bit. Not only do you see the price change here, but you see the volume pressure imbalance. This is really showing us that this is seller's volume. If you don't like the delta volume dots, the green and purple, and you just want to see one color, you can change it to that. And then you can just rely on that volume pressure a little bit more, and you'll get a lot of similar results. Is kind of what I do. I like correlated markets. I like to trade correlated markets. I also like to know what's correlated so I can trade against what's correlated, trying to diversify some of those techniques. So that's kind of what I'm looking at there. Again, a sharp move down. When you have a sharp move down, similar to this move down, what do you expect? You can expect some form of imbalance as that liquidity doesn't have the chance to fill back in fast enough. And you can see that same thing here. We had that sharp move down, not enough liquidity, and it does get a little bit of a pullback. We can actually take a look at NASDAQ as well, and you'll see the same concept. Sharp move down and that same pullback. Sharp move down and that same pullback here. Obviously, NASDAQ is a bigger number, so you got to zoom in differently. But you get that same concept. And that can be a confluence there to kind of give you what you're looking at. At this point, we have what I like to call kind of an inside day. And what I mean by an inside day is the opening range essentially set up our entire range. Now, what's interesting about days like that I've seen is a breakout in any direction has a chance to just run. And that's kind of what we were hoping for today in general. We're kind of hoping for a breakout at some point of these levels. We don't really care which direction, honestly, when it comes to trading the spot directly. In active portfolio management, if you're looking at options tradings or hedging strategies, direction matters a lot more. If the market's selling off and you're trying to be directionally neutral, well, you're probably long a lot of delta now, and you probably need to get short delta by shorting something. You can short any correlated product and kind of balance your delta flow out that way. But in spot, we're not necessarily looking for that. We're looking for a little bit more whatever the market kind of gives us. We're looking for that organic feel. We've tried to push into this liquidity a couple of times, and we haven't. We are seeing heavy buying on the volume pressure as we reject a little higher back into that midline area.
Jack, a question on that.
Yeah.
So that first move down. So there's been heavy buying in this zone there by the liquidity a few times. On that first leg, because we saw it in real time. I'm just wondering, if because your bias was long to begin with, and then also you had your VWAP set. I don't think you're much of a VWAP trader, but in case you were. You've also got the midpoint there, or the yellow line, would you be looking for that move back up into there after it traded into that high liquidity around 55, and then you saw the skew in the book and the volume come in on the buy side?
So in this particular case, no. And the reason is kind of what I mentioned before. I was long on the rip from the start, right? And I did get long towards that put wall area, but it's this congestion, this right here. As the market's moving, here we go. This congestion right here is kind of uninteresting to me. I want to see less congestion and I want to see more directional trading. If I'm looking to scalp on a specific trade, I will look for that impulse down into this area, and I'll look to scalp a small trade here. I'll look to get long on what I see as a rejection in that area, and then I'll look to take a couple of points and then I'll be out of the trade. And that'll be basically all I'll take from that kind of stuff. Now, you did get a full reversion on that particular one, as you see here, as you kind of see here. But on the next one down, you don't get the same reversion, not immediately, which is why I kind of focus on just taking a couple of points at a quick scalp. There's different ways to kind of look at that. If you look at the more microstructure, and this is kind of, it's a little more difficult if you're not used to looking at order flow, whether it's in a heat map or in Bookmap itself. You can kind of see that as you zoom in, the market's really fractal, and you still have these up and down legs. I would have looked to get long essentially at this point right here. As we broke this, and I would have looked to try to take this point right here. And the reason being would be this is where the midline is, and you can see that we had the same volume right there. So if I was looking to scalp in that imbalanced direction, that's what I would be looking to do. I do not like counter trend trading for a long distance because it generally doesn't work. Trading with trend just generally works better in my experience. My scale is off.
But your bias today is long. I mean, wouldn't that be the?
It is, but we did have that sharp down move. So we've reached this put wall, and this put wall holds a lot of value overall in my trading bias. We're running into that put wall and we're not exiting, and volatility is staying high. We've still got volatility in 18 handle, 18.6 actually right now. And because it's not really going down any longer, it could take time in the market. In the options complex, you're looking at Vanna and Charm. And what Vanna and Charm is, it's just Greeks, but all they mean is it means volatility and time. If you have more of one, you need less of another. If you have less of one, you need more of another. So it works conversely. And as we've got that kind of sideways price action, I don't want to be long until I see that we have more confluence in the market, more participation as we break through there, or I see that time is passing, volatility is compressing, and I have more of a confluence there. So right now, I would only be looking to scalp. I would not be looking for a long directional trade. I would probably be looking for rejections here and rejections here to try to take these trades into a scalp. I would probably take off 50% of my positions on these particular areas to lock in profits immediately, and I would adjust stops very immediately. And the reason is because it's only 3 points wide. And when it's only 3 points wide and you're looking at potentially getting an interaction there, and we're looking at it in real time here, getting that interaction there, it could revert. We could get that buying or that selling pressure back into the market right there. So I don't want it to reverse into my face. And taking profit off the table locks in that profit. It allows me to be a little bit more liberal with my stops. So if I would have entered long here at that area, my stops probably would have been here at the previous little swing low that you could see as we moved a little higher. And then I would have taken profits probably right about where we ended up, a couple of ticks below that level. And then now I know that if this trade reverses on me, I'm basically at scratch. I don't need to be focused on it, and I can kind of let it take its course. We do get that interaction there, and I take off another half right now. That's what I would be doing right now. Because we've now reached the levels where I see everything is good, I don't need to worry about that. Now, I do something a little different here. If I'm interested in that level in a longer term scenario, I will pull my trailing stop down in conjunction with how much I've gained if I'm willing to take some of that confluence. Because I'm willing to let this trade kind of breathe a little bit more. It's made profit, so it can't hurt me necessarily. And if it can't hurt me, then I don't need to get in its way. How often have we as traders kind of gotten in the own way of our trades and not let them have the room they needed to kind of move? We see price reverse, it comes right into our stops by a single tick, and then goes right the direction we were initially in. So I'm not necessarily one that kind of holds that, oh, I've locked in my profit, I don't need to worry about too much more. And as you can see now, it would have paid off pretty immensely. We get that push off like we wanted. We're looking at that liquidity in these levels. And probably now I would move my trail up. I would honestly probably move it up. We're probably looking right about here is where I'd be looking. We're locking in some of that profit, and we're looking to see if we get that confluence of trading at our key levels.
So
we want to see. Go ahead.
So you from your opening range trade, you would still be in this, and this would just be a scalp that you're kind of adding in and taking out along the way. Is that right?
So I exited my opening range trade today, mostly because it's very tough to. Yeah, because it's very tough to focus.
Yeah.
It is very likely that I would have held a runner, just in the market in general. Sometimes what I'll do is I'll 1-for-1 transfer a runner, because you can't be long and short the ES market at the same time. However, you can be long and short the ES and the MES. So I might look at taking the exact same trade and moving that trade to the MES, taking the commissions there for the entry and the trade fee, and just letting the MES run, and then look at new trades and new setups in ES. I might also look at using an options position to lock in some of that profit in different forms. It could be a long call option, or it could be a sold puts. I could be doing a put spread there. So it really kind of depends. In this particular scenario, kind of looking at it, I probably would have looked at it exiting around here at this level down here as we push down to this overnight low. Because of the confluence that we had before, we kind of traded down from our opening range high. We kind of rejected off the put wall lower several times. I probably would have closed my runners around here somewhere, or maybe waited for the imbalance and let those run kind of into that imbalance. But I probably wouldn't have had them on at that point. I would have been looking at something new, and it probably would have been around this liquidity area here. As you can see, we pushed into the liquidity. We did get resolution here, and it's very similar to what we got here. There is a lot of interest at those areas, and it interacted. And anytime liquidity interacts, I'm always interested. If the market's willing to participate, I'm willing to be there and participate too. So I probably would have looked at something like this, and you'll see a lot of these kind of setups in the channel there, in the futures channel. And I would have called this a lower high setup or higher low setup. I maybe have entered probably at a half position. I probably wouldn't have entered at a full position. And as we get the move that we want, I would have looked to break the midline. And as we broke that midline there, I would have looked to trade. In this particular case, you can see that the point of control, VWAP, and that opening range midline are kind of all interacting at the same area. It gives you a lot of confluence that area is important. They might not be lining up perfectly, but I would be looking at any confluence right here to add into my position. And one of the things that I talked with Owain about is scaling into positions and scaling out of positions. Taking those profits early, allowing you to stay in those trades longer, and scaling into a winning trade if you've got the direction right. You don't necessarily need to just hit the buy button in the morning, walk away, and come back in the afternoon. You can scale into a position as you get the market right, and you can look to scale out of a position as you get some of your key levels. You saw earlier, as we kind of pushed up, we interacted with this level. We interacted with that liquidity there. We did get a little rejection, but we got something very interesting in return. We got support at our key level. We've got volatility continuing to compress. We can see that here. As volatility is compressing, we're looking for the market to try to recover and try to go up. In a long scenario, a home run kind of area is getting back to the close yesterday. That would be amazing as we push down from that area yesterday. That would be kind of where I see like the longest expectation that we could have. The overnight mid area, that 43.71, kind of where we're at now, is kind of where I would expect things to kind of peter out. But if things do progress and we do get some of that recovery there, that's what I'm looking for. I'm looking for those areas. And I want to be looking at kind of what this liquidity is doing in the market. You can see we have some here, but as we kind of go up, there's not a lot in the market until we get much higher. So those areas really aren't significantly of interest right now. There's nothing really there that's interesting me. So any long trade, I might be kind of keeping my trailing stop a little closer. You see we got that rejection in that area. I'd probably be moving this up as we go. And we're just looking for confluence. We've locked in essentially another point or two in the market, and we would just let these runners kind of go. And if they kind of reverse on us, it doesn't really matter because the trade's already profitable. One of the things that I try to impart on people, especially juniors, is you don't need to make home runs in the market to make a living. I can promise you that because I don't shoot for home runs. They do happen. They happen decently enough to be happy about, but you're not looking at getting a 15-point trade every single day. And if you're not looking to get a 15-point trade every single day, it relieves some of that pressure off of you. And one of the hardest things I feel new traders have is dealing with that pressure and dealing with their sizing up. And I have a hard time trying to get through and understanding those emotions because I was trained essentially from the take your profits now, pay your rent, eat some hamburgers, have a good day, come back tomorrow and do the same thing. Take it slow, take it steady. You're in this for the long haul. You're not in it to get rich in a month. We're not looking to put a down payment on a Lamborghini next month. We're looking at kind of making this, a career path essentially. And I know a lot of new traders try to do that and they try to look at those elements, but I think that they get hung up on the numbers. They want to make profit now. They need to make profit now. And if they don't get that instant gratification, they don't feel rewarded. They don't feel necessarily like they're doing the right thing. And that can be incredibly tough when you put that kind of pressure on yourself. But if you think about it, it's a lot simpler than you realize. If you made $40 in MES over the course of 3 months, every day, $40, just practicing your trading routine, low risk, low reward, just $40. And you work through that, through your paper trading and through everything else, and you get to the point where this is consistent, you can move to the ES, the E-mini market, and it's 10 times. And you're at $400 a day, essentially. With the same leverage, you're not doing anything different. You have just scaled up organically as you've learned and experienced the market. And if you think about it, there are 252 trading days in a year. And if you're averaging $400 a day, that's a $100,000 salary. And that's what it is. You're not gambling $100,000. That is a salary. It is a job. And that's the way you need to think about it from that aspect. You don't need home runs in the market. You need a couple of good trades throughout the day, understanding what the market's giving you and understanding how to take these trades and how to manage that money and then reinvest in yourself as you grow. You don't need to buy all the software at one time. You don't need to buy every indicator in the book. You just need to develop and put the time and energy in to understanding how market participation works, how order flow works, and how different confluences for these elements will work as well. What's interesting right now, you can't really see it here, but this is the Z contract. Because we're so negative, the Z contract is actually moving quite heavily as hedging flow is increasing. And that's a correlation that I also keep track of. And I'll utilize this mainly if I want to take a longer trade that I don't necessarily know is going to pan out today. maybe we're at an extreme low and I don't like where the market is, I'll use the Z contract, which adds duration, and I'll place an options trade, and I'll allow that trade to just kind of mature. And by doing it that way, one, I'm avoiding initial margin and overnight margin, which is 15 to 20 times what it is intraday, depending on your market or your broker. And that can be expensive. This allows me to kind of hold a position in the options market, knowing that maybe we are a little low. But we're seeing a lot of activity in that contract comparatively to really over the last few weeks. We've been trading basically at parity, which means that likely because we're higher, the market is expecting higher, whether it's short term or long term. And the liquidity in this market is much less. You can see the number of contracts here. There was 2,000 volume here. It's going to be a little bit of interaction. There's 3 there. So orders of magnitude different. But there is participation there, which tells me that the market doesn't think that it's staying lower for longer. It's going to go back to an upward trend to a degree. And they are essentially utilizing what liquidity they can to kind of offset those positions as needed in those later cycles. This is a really good confluence to what we're looking for today. If volatility continues to compress, we could continue to look to the upside for the most of the day, and take any kind of longs that kind of develop in the lower area if volatility continues to compress and time continues to go. Ahmed, once I changed my mindset to look at trading as a skill set rather than making money, things change for the better. Absolutely. It's incredibly important when you think about it that way. You're developing a set of skills. You're developing something. Very rarely are you ever good at something off the rip. You might be better than others, but you might not be the best that you could be. And it's only with time and experience and effort that you're ever going to get there. And you need to look at it from that perspective in the markets, the same way you would any other skill or profession or anything else. You need to treat it the same way. I still spend probably 10 or 12 hours between the markets and research almost every single day, doing a variety of different activities. And I have been doing this for a while, and I still spend that amount of time. A lot of that time is a little bit more passive than active. It's not as efficient as it was when I was younger. That's the disadvantages of having one of the best advantages, and that's having, a kid. He occupies a lot of my time. So I don't spend as much active time, but there's generally something on in the background, whether it's, Bloomberg News Service or something like that kind of going off, as I can kind of keep an eye or an ear on the markets as a whole. And a lot of times you'll see me often in the webinar streams in general. I frequent Bruce's stream, and I kind of talk about different things there with the chat. And it's the consumption of knowledge that really kind of propels you as you kind of move forward. And it's really shaped, I think, all traders in the last 5 to 10 years, that kind of widespread, wide-reaching knowledge that we have on YouTube. I mean, if you think when I started trading, there was probably like 3 trading channels on YouTube, and one of them still trading every single day. Well, I think it's 4 days a week, but he's still going. He's been going forever. But now there's so much more information. You can get so much more information. You can learn so much more in trading, just getting started in the process. And it doesn't matter what instrument you trade. Also, fees. Fees are significantly cheaper now than when I started trading. I remember paying dollars for each contract every single time, and now it's only like $2. Options contracts were, $2 or $3 each contract. Now it's 65 cents a contract or 50 cents a contract. So fees have come down quite a bit. I remember market data used to cost me about $100 as opposed to the 30 that we get now, and we get better data. So we've definitely been advantageous in this information age in the markets. We're kind of petering out here. I'd probably look at getting out of a position in a sell-off back to this put wall. It's kind of what we're getting as we see it. We got a lot of selling pressure here. You can see both markets are selling. The volume pressure is still selling. And you see that order flow developing kind of in real time there as we reject lower. And really the drop dead area is this area right here. Can I speak on market manipulation and what it looks like? Orders being moved and pulled. Bookmap will flash and get bright and then go back to where it was. So it kind of depends on what you consider market manipulation. In the futures market itself, there is very specific rules from the NFA where you have to have some interaction or you have to move price before it gets within certain levels. And as long as you follow those rules, it's not technically manipulation. And essentially, I don't treat it as manipulation. Instead, in those particular cases where we see that liquidity kind of moving around, like we saw earlier in this area over here, where was it? It was right here, where we saw this liquidity kind of leave the market as we push down. I don't look at that as manipulation as much as I look at it as kind of a rebalancing. You got to remember, awesome. Yeah, you got to remember though that the markets, if you're trading futures, you and we're trading futures directly. The vast majority of futures participation is institutional, dealer flow, hedging flow, and what they're looking at is balancing different underlying. So if you see a sell-off in Tesla, you might see a corresponding action in the futures market. Maybe they're short Tesla and they're long the futures. That way, if the price moves against them, they can rebalance their trade based on delta equivalency. And if they're using options, they'll use delta and gamma consecutively, depending on the duration left in the trade. So I don't think of that as specific manipulation. Now, if you're talking about Forex markets, currency pairs, currency to gold, those markets, you'll see a lot more manipulation. And it's not necessarily manipulation in the fact that orders are being pulled. It is that large blocks of orders get reallocated for every event that happens. You got to remember that if you have a currency pair, whether it's, sterling to USD or Aussie dollar to USD or even USD to yen, when you're looking at those markets, all of those markets are correlated. And you can trade any of the two pairs essentially in any direction that you want. But if one event happens in one of those markets, the entire global space of the Forex market has to adjust its position. And it does so dynamically. It does so based on its ratios in its individual programs. And a lot of those are large flows that are moving very, very quickly. And if you've seen Forex, when you've seen one of those adjustments, those liquidation events, you'll see price moves drastically in a very short period of time and then kind of stabilizes in a very short or tight little range. That I consider more manipulation, and it's mainly just due to the way liquidity works in those Forex markets. I do think you see a lot more manipulation in crypto markets. Large blocks of traders can push price very quickly in either direction. I think that those markets have a lot more concerns for manipulation. But in the ES, I don't consider passive liquidity moving around in the book manipulation just because the futures market itself doesn't. So algos can be very, very beneficial. A lot of traders think that they work against them, but I think that it's kind of a perspective on the way you're viewing the market. So kind of going into these gamma levels, we know that gamma is built off of open interest within the options complex. And I could talk about the options complex for hours on end, but just kind of pushing forward with the topic. We know that as we interact with these levels, whether we break above or break below those levels, those portfolios that are in those positions need to adjust their deltas. If they're short that position and the market's working against them, they need to be long in the futures market to offset those positions. If they don't do that, then they're just going to take a loss, which is drastically different than the average retail trader. If I was in an options trade and I'm short the put wall and I'm long somewhere a little bit lower, forming essentially a credit spread, I might just sit there and eat that. And I might not necessarily take a spot delta gamma trade looking at trading the deltas to balance my overall exposure if it continues to work against me. And that's kind of a disadvantage that retail trading has. One, it's cost prohibitive. It's expensive to make a futures trade because you got to make a trade for each commission. But you got to look at the quantity of each trade that those dealers, those banks, and those hedge funds are making, and it's advantageous for them to make sure they lock in those profits or minimize those losses. One of the things that we see at the end of the day is market on close. And that's what that power hour kind of comes about. And you've seen, if you look at Financial Juice, they actually post market on close. If you have access to time and sales data, you can actually see market on sales close comes through. And those can be incredibly important because they are hedge funds repositioning, but they have to do so at a penalty. If they need to reposition 100,000 shares in an underlying, let's say Tesla or Apple or something, if they need to do it, they have to lock in that they're going to do that, and they place a market on close trade. And once it passes a certain timeline, they can't change that trade. So that gives traders an advantage. And maybe you've seen at the end of the day where Apple or Amazon or Tesla rips up and you're in along there. Market on close kind of helped you in those cases. And you can get some of that hedging flow and that algo working for you. Similarly, I posted something in the previous, I think it was the Blue Jacket Digest, where we kind of talked back and forth. I posted on how you can see an algo, and if it's been there for several days, you can anticipate how it works. And if you can anticipate how it works, you can trade it either with it or against it. So if you know that an algo at this point has placed XYZ number of orders every time you've come into a sell-off into it, you could get short the market right here, set a limit profit-taking order right below. The algo pushes you directly into your profit-taking, and you take a quick scalp. Or conversely, you know that the algo, once it places those orders, you can place a buy order and get absorbed back into the imbalance higher. There's a couple of ways to use those. The issue with those is you do need to know where you are at in the market, and you need to know that the algo is there, because not always is it going to be there. And right now we're in an interesting position where some of these algos and these rebalancing efforts are sliding a couple of points. And the reason they're sliding a couple of points is, again, due to volatility. The level of volatility in the market has adjusted substantially from Monday to Friday. So where they were earlier in the week is slightly different. If volatility is staying level, whether it's high level or low level, when it's staying level and balanced, they're generally in the same area, sometimes even the same ticks. Nothing's really changed. What other questions? Does anybody have any other questions? Because we're kind of getting towards the end of the wire there. We're still looking at that long area. We haven't rejected back, and we see volatility kind of going down. Go ahead.
Yeah, it's hanging in there still.
It's holding. Yeah, I'm not really interested in shorting this market in the long term at all. I think that as time passes, we're going to continue to get that volatility kind of compressing. And I really do think that we're going to get a break of this opening range, maybe around lunchtime, when that volatility kind of drops off. Or volume, not volatility. As London leaves the market, we could get a break and a continuation. And if we do, where we closed yesterday is not a bad area to be looking at a potential target. And it could get a headwind. Or not a headwind, a tailwind. And we've seen that happen before where an options expiration hits, we see volume coming in on the buy side. All three indices right now, have strong buying volume. Volatility has dropped almost a half a point since we started talking. That's intense. That's an amazing level of volatility compressing. It's really losing value in those puts in the market for that hedging flow. And as we kind of push forward, I'd be looking long, honestly, for probably most of the day, unless I see something different. We get a push right through those liquidities. What I want to see is it take the second. I really want to see it take the second. I don't want to see it stop. I want to see it push clearly. It does. Now I want to see it kind of come back into this range.
Yeah, perfect. Great stuff.
Yeah. And that's what I look for all day. That's my favorite part of the day, looking at this.
Um, let's see, Jack. I had a couple questions for you regarding I love the way you're using Market Pulse, and you've got it up there on the screen, and that you're looking for that. What I've really liked about it was um, it's right there in a little widget. So you don't have
Yes.
to go and look at other charts. Like,
Nope.
it's right there and it's going to, oh, okay, well, I see price change and volume picking up. Oh, this is the correlation I'm looking for. Stay in the trade, you know? Um,
Exactly. And I also keep, like I said, that correlation tracker for NQ. I keep both of them right there. They're incredibly important tools. I
yeah.
want to know what the rest of the market's doing because there's so much market overlap. So much market overlap. And we're kind of getting that pullback that I'm looking for. Now we need to be able to hold these levels. We need to be able to hold these levels, or I'm looking to kind of take profits and not really stay in things. But I love market pulse. I love market pulse to the degree where when we get to that kind of sideways part of the day that almost always happens around that lunchtime, I kind of don't look at my bookmap chart for a little while and I really start getting my annotations and everything done. That's generally when you'll see me start posting in the futures channels because I can kind of now like digest the last 3 hours of me adjusting my earnings trades in the options market, my active portfolio, my trading in the futures market. And it's finally the time where I get a chance to breathe right before I get lunch. Um, I'll pull Market Pulse down. I pull all of these widgets down next to my brokerage platforms, next to my annotation tools where I start really going through things. So I can keep an eye on the markets anyway. I really like price change because it tells me exactly what price is. When I have my equities up, I keep track of whatever equities trades I'm in. Those will be here as well. And I keep the volume pressure up for all three indices, like you see, so I can see that. And then specifically, I keep the volume pressure imbalance in ES. The volume pressure imbalance has earned its place on the chart forever now because of the way it just shows me those counter impulse moves. I am a huge fan of them. I think Market Pulse is a fantastic tool. The only comparable tool is Tick Strike, and it is significantly inferior.
Yeah. Yeah. No, it's great. I mean, and plus you got several algos in Market Pulse,
Yep.
like you can see there, you got your price change and your volume pressure, but there are and you have your volume and balance pressure as
Yep.
well.
Yep.
Um, no, it's good stuff. Yeah, I really like it as well. And what I really like is the way that you're managing your trades with it.
Yes.
That's really the key because
Yep.
it's telling you something and it's just like, oh, okay, well, now I kind of know, I have more information uh, to make a better decision.
You
Um,
only get correlation in one market. You don't get, that overall correlation that you're looking for. Maybe you don't stay in the trade as long. Maybe that is giving you information, and it's important that you take it as information. Take the information and understanding for what it is. If you get that large all three market move like we saw, well, that's confluence to stay in and let it reach that target. That's what it's telling me mentally.
yeah. Yeah, absolutely. So let me, if I can, I just want to, or please get your questions in for Jack. This is your time. Let's get it in the recording so you guys can come back and watch it. Jack has been working a lot over on the Discord channel, and I'll mention some other things that he's working with us on as well. But if I can just kind of sum up what I gathered early on when you started here, and just kind of put like a bit of a checklist together. So you're looking for the opening range, the first 30 minutes,
Yep.
and then you're also looking at your options levels.
Yes. Time and sales, deltas. Yeah, Rob, you can ask questions in this chat as well. This chat or YouTube, your choice.
Yeah, there's the chat on Discord. There's the there you go. Rob's got it. It's the special events hashtag special events chat just above there. So above the special events voice channel.
But before the opening range, though, I am looking at that bias. I want to have some bias. I want to either be right or wrong when the market starts opening, because if I'm wrong, that tells me something and I can reevaluate what I'm looking at.
Yeah,
Maybe I missed something.
in fact,
So
in this example, you wouldn't have waited for the opening range. You would have been in already.
I was in already.
Yeah.
Yeah. I was talking with HE earlier, and I was telling him I was going to be long pretty much from the rip.
Yeah. Yeah. And then
I use the default JLix, the default volume pressure imbalance. So this algo went through beta testing, and I put in so much feedback with regards to the Market Pulse add-on, and I know a ton of other users did, and they responded overwhelmingly each time with different things in the background. We could see some changes as it kind of progressed. The defaults are perfect for me, and I have no need to change them. So they are default.
Yeah, that's what I use as well. It's just fine. Let's see. All right, so opening range options. You've got your correlated markets there with the Nasdaq. You've got your market pulse. You look at the VIX as well. That's
volatility in general, not just VIX, but volatility in general. VIX 1D and the VIX market as a whole. Yeah.
Okay, and then at that point, that kind of sets the tone for you.
Yeah.
Now you're looking at order flow. You're looking at the liquidity and volume at your specific levels that you have set in the overview.
Exactly.
Yeah. Okay. Great.
And that overload builds off of underlyings as well. The mega tech stocks have huge impacts on both indices. So I keep track of their market structures as a whole, and we see a large buy sweep come in there.
Yeah.
A lot of good volume there. And I keep track of all of those things as a whole, and I utilize the underlyings to give me an idea. If everything in the underlyings are telling me that they're going to move lower, I'm not necessarily going to be looking to go long in the market, because the market is made up of these mega cap stocks, and I know that they're going to have an impact on it. So I might be looking for smaller trades. I might be looking to go short in the market in the short term in those kind of confluences. Rob had a question in Discord. How do I handle burnout? I'm at a point where I seem to be stuck with my progress. This is a good question, and I kind of alluded to it a little bit earlier. And what it is if you're looking for results are the last thing you're going to find. It is one of the toughest things to do, is because you have this inherent just normal personality, everybody does, where you are results oriented. You want to see results. And when you start trying to find those results, you start nitpicking the things that you did wrong and not the things that you do right necessarily. And you're not focusing on the things that you're getting right or the things that you're seeing. And that can be a major thing. Aside from that, the way I handle burnout is I just try to put more time in, which is counterintuitive, I know. But I found that for me, if I feel that kind of overwhelmingness, it's usually from anxiety. And the way for me to counter anxiety is one of two ways. Either I just kind of avoid it, or I kind of like head on collision into it until I can work and brute force my way through it. I don't personally do well with walking away from anxiety. For those who know me kind of in my personality in general, and there's a couple in the YouTube chat I know, I am a conflict-oriented person. I like to meet discussion with frank and fruitful discussion. I like to kind of run headfirst into my problems, because I can kind of get a resolution a little bit better. And I just kind of try to take responsibility for those. One other area, and I did this a couple of times in the earnings cycle this time, I sized trades improperly a couple of times. I got a little too big in certain situations for earnings overnight trades, which are incredibly binary and volatile. And when I did, they hit me in the face. Sizing is incredibly important. What is my process for vetting a trade setup? I'm trying to figure this out so I have at least one verified setup with an edge. It's going to be that opening range. It's going to be that opening range every single time. And it's going to be looking for short profit targets. Take it from this way. Let's say you're trading MES just for getting used to the markets. You take the opening range strategy. You're not looking to hit home runs. You're looking to just make profitable trades. And you take that opening range trade that is one of my bread and butter trades. And you can see it here, and it's set up. Like I said, right here, we were looking for a pullback into this area. Sure enough, we get our pullback into this area, and all I'm looking for is to meet where liquidity was before. Where did we trade before? Let me get some profit right off the table. And if you look at that trade, that's 43.76, 43.72, 3 or 4 points. I'm not looking at a home run. I might even have scalped the target right here at this level, halfway between the two. Maybe it's 3 MES that you want to trade, right? I do one at the halfway point, one at the next target. And at that point, there's no pressure on the trade to perform. And if there's no pressure on the trade to perform, I can sit back and let it go. I've locked in a good amount of profit here, so I don't need to worry about those concepts. That opening range setup is one of my bread and butter setups. I would use it every single time. If you're coming from the top down, Rob, you've probably seen this one as well. If you're coming from that initial balance area, maybe the initial balance is up here. In this case, you're looking to break in. You get that retest right here. I'd be looking to take that opening range trade down to the midline. In that midline we talked about earlier, because we're kind of locked in here, that midline is that level right there. That's what I'd be looking for. Those two trades will get you on a ton of small little trades. And I spend the entire day in the markets. Open to close, I spend the entire day in the markets. I know what different underlyings are doing. I'm adjusting my active portfolio. I might not be trading every minute of the day, but I have the markets up. I have an idea of what's going on. And I constantly look for either confirmation or conflict with my bias. And if we look at today, we got what we like to call confirmation. And if we take a look again at VIX, we started up here in the 18.8 handle. We're all the way down here, a full point lower. We're getting the volatility compression that we were looking for in the markets. We've had time pass now for 2 hours. Yeah, 2 hours. So we've got all of those long puts kind of leaving the market. And we can see that we're getting this continual buying pressure to the upside as these markets kind of go. And this area, this 43.80 area, 43.84, is honestly my biggest target right now. And it is the reason I'm looking at that specifically is because that's where we closed yesterday. So a runner there, it might take off a little piece there because that's where we closed yesterday. There was a reason that we kind of closed there. There was market participation there because it's power hour. It's the end of the day. So that's where I'd be looking for if we were long right now. I do not have a website. I don't sell any products. I don't have any coursework or anything else. My DMs are open for any kind of trading discussion, knowledge, anything like that. So if you just want to ask me questions about a trade in general, you are welcome to do so. You don't even need to use Bookmap necessarily. You can just ask that. Who was that? I believe that was Dr. G, if you are still there. So I am active in the Bookmap Discord. There's a couple other Discords that I'm active in as well, but the Bookmap one is probably one of the most active. I post setups almost every single day. I think that, Rob, working on it is what you got to do. I mean, I started with monopoly money, literally monopoly money. It was paper trading with actual paper on the initial setups that I learned the marketplace in. And at the end of the day, we were given monopoly money. It was a prop floor, and it was an actual prop floor, not the current prop trading that you see. And in those concepts, at the end of the day, we count out the monopoly money, and at the end of the week, you'd get different prizes and stuff like that. And by having that kind of competitive competition and good-hearted nature without that risk on the board, you got that sense of accomplishment. You got that sense of pride, which is incredibly important when you're learning a task. Nobody wants to learn a task that they just beat their head against. Trading doesn't need to be a souls game. We want a little bit of success here or there. We want to know that we're making progress. And I think that kind of concept is important. I can't advocate enough about paper trading. I don't think that traders utilize it enough. I think that prop trading is great. The prop firms as they currently exist I think that they're fantastic because they give traders an opportunity, but it's very easy to get into. And I think that traders don't necessarily practice enough of what they're trying to do and their understanding in the markets and put it in real time use until they start putting money on it. And that's rough. Ahmed, yeah, your stop loss needs to make sense. Absolutely. I think Ahmed's one of my buddies there, if I remember correctly, based on that last name. I move my stops often, and I make stops differently within the markets. I don't necessarily use that I need a 5-to-1 risk reward every trade I make. I find that that is quite often a losing process. If I think that a trade's going to go 2 points, but I know that it could reject also 2 points before it makes those 2 points, I'm making that trade with the knowledge of that. So I'll place my stop loss accordingly. I use the swings of the market. I use those market levels heavily in my process on where I'm looking. If you followed some of my trades and you've seen them before in the Discord, you've seen that I also front run my targets often. I don't stick around to get to the tick. It doesn't matter. I don't want to be doing that. I think that kind of trading is very difficult, and if you get too tight, you just get ticked out. How many times have you had a trade where it went literally to the tick where you were, and then reversed and went the direction you want, or you've seen it do that? It can be incredibly painful to watch. So I always give that 3-tick room. I think that's incredibly important. Yeah, I'm at TP based on some sort of gauge metric like ATR or scalps. I'm big at scalping. I'd like to scalp out targets. I'll scalp out targets based on liquidity and based on distance. So down here at these levels, if we had a trade coming from the opening range, crossing over the midline here, my magic pin's not working. There it is. I'm looking to take a profit, probably 50%, if we get that pullback and long there. I want to take profit off the table. If I don't see any major liquidity levels in there, I'm looking at 50%. If there's like a large band of liquidity sitting directly below that 50% level, I'm looking at that working for me. I'm looking at taking that liquidity, and I might front run that by a tick or so, or maybe I'll sit directly in that liquidity as a target and just watch the trade actively. Anybody else have any other questions? Am I going to be regularly scheduled streamer or a special event? I believe that this is a special event. I will still be posting content regularly in the Futures channel. I would assume that these kinds of events are really up to user participation. If users want to see more content, they get the content that they want. Bookmap's really been pushing kind of that user engagement. If you want something, let the guys know, and they'll push forward things there. So yeah, if you guys want to see more of that, definitely just reach out.
I would like to take that further. Jack, you can hear me, right?
Yes, sir.
Okay. So I'd like to take that further. It kind of segues nicely, Rob. Look, we're open here. I know you can't see this, Jack, unless you see it in YouTube now.
I've got you up.
So there's a lot of opportunities here, as you know, Rob, and we're looking for people that are engaging and want to do this if they're interested and are passionate about it. Here's a path for you. In fact, this is exactly the path that Jack took. He was already in Discord, already contributing a lot, and it popped up on my radar, and what he actually did was he joined the Blue Jacket competition, and then he won it, and then he was invited to the Bookmap Junior Academy. Once he's in the Junior Academy, that's this program here that I'm showing here. I just want to briefly go through this so you guys can understand the path that like Jack took and others took. And a little bit of promotion here at the end. Sorry, Jack, but
that's okay.
It was just such a good segue into this. I thought I'd bring it up.
I found a lot of value in the Bookmap Junior Academy in the competition specifically.
Yeah. Yeah,
Go ahead, and then I'll mention how it kind of affected me a little bit and how I was able to transition
that
to.
that would be great. I mean, like,
Yeah.
so anyway, I'll put this into the chat. It's just bookmap.com/academy, and then the pathway is here. So there's first you apply to the junior academy, and then you have to kind of prove yourself or have a track record in there. And if you can do that, then you're invited to the Bookmap Junior Academy. Now, you can see there's a link here to the blue jacket as well. This is step one, right? You can click on this link and here's the Junior Academy or the blue jacket competition if you want to join that. And then, so then, you can see what you do and what you get here for the Junior Academy. If you get accepted, then you're boosted up into the Bookmap Academy and you can get Bookmap for free. Basically, what we're saying is you put the time in, you've put the effort in, shown your passion for this, and have created some great content, and we're willing to help you out there. So we'll compensate with the free Bookmap at that point. Now, if you do well here in the Bookmap Academy, then you can get into the Bookmap Academy coaching. Basically, you're up to a point now you've reached where you can turn around and come back into help these junior academy guys. If you do that really well, the next step is Academy Streamer. And the path is here. So, for example, Jack is in this path right now. Tom B, Moby, and Doug Pless, they're streaming. Okay, so they're already over here. We found some great traders, and we're happy as can be. And therefore, we're going to offer opportunity. So, if you guys are interested, there's a path here. Just wanted to let you know about that. And Jack, if you have any other words about that, I'd love to hear it.
Yeah, of course. Slightly before that, let's answer a couple of questions. I draw on the screen. Yes, you can see I have annotations left and right. I keep these all the way. While we're kind of going in there, we saw this rejection lower, a break of that level. That's something I'm interested in. Interested in exiting along if I was in along, but aside from that, Jackson, how much to buy stocks? So I utilize portfolio margin to buy stocks. So it's essentially portfolio margin cost, which is 6-to-1 leverage when I'm buying or shorting a stock. If I short the underlying specifically, I will do that to some degree. It just depends on the underlying. Because I trade mega caps, I generally only will do that on one or two underlyings, because to get any significant return for reward there, you're putting up quite a bit of capital, and it gets tied up for time plus 2 days. Whereas I could take an options trade, use up less capital, and take a shorter term position. So it depends on the situation. Obviously, options, they do have their cost as well. It's generally about 50 cents per contract on the higher volume traders. If you're a little bit lower volume traders, you can look at about 65 cents probably. So that's how much those generally cost. Trading for a living, you love these events. Yeah, man, these events are great. You can get a lot of good information. You can see a lot of different techniques. There's not just, order flow. From my perspective, you got volume profile traders, market profile traders. JTrader comes in a lot. He's got a huge following there. You can see those. Kind of taking it back to Blue Jacket and that competition as a whole. So I hadn't used Bookmap at first at the start of October. I was time and sales oriented, footprint oriented, and tick chart oriented. Those are really how I utilized everything there. And it's great. You get a lot of information with footprint. I don't begrudge those guys of the process in that technique at all. I think that it's fantastic. One of the issues with it, though, is there's a lot of numbers on the screen, and those numbers change, and you're constantly looking at things. And it can be very difficult on the eyes, especially when you're trading multiple underlyings, especially when you're keeping a lot of other levels in your head as a whole. It can be incredibly difficult. So I wanted to try to find something that was doing something different, something that I was able to use. And I kind of stumbled into Bookmap because of that, because a friend mentioned it. He's like, hey, maybe you like this because I know you like visuals. And it is exactly what I need. So I'm getting the footprint information right here in the chart. I can see that we're getting this buy side. I can see that in ratio and in conjunction compared to the sell side, we have more buyers at that specific moment, and that tells me something. Also, the fact that it is real-time streaming is massive for me because I don't need to focus as much on market profile because I can see the market profile as it's taking shape in real time. If this was the first 30 minutes, you might take this as the A block here. And I can kind of keep that in mind there. And I can kind of see the way the market profile is working as a whole. So it kind of combined a lot of little techniques that I was already doing in a more visual manner. And because it did that, it was very important to me. So I purchased Bookmap for that reason. And a week later, Wayne posted the start of the competition. And I'm very big on journaling. I'm very big on annotating. As you can see on the charts, I draw all the time on my charts. And it was a good way to get familiar with the tool. And that's exactly what I utilized it as. I'm not necessarily a junior trader, obviously. So it didn't have that kind of appeal to me. It had the appeal of this is going to give me the best and the most use out of the software is by competing. Not only that, but I'll put myself out there. And if I'm understanding the way Bookmap's working differently than I should, it's going to generate conversation. Somebody's going to tell me something different. And instead, what I got was a lot of confluence on these kinds of trades and kind of techniques. And people started asking questions about different things that I would do. And that kind of led to larger annotations. And you can see some of those in the previous little information thing that I did with Wayne with Blue Jacket on YouTube, as well as it's still posted in there. All of those things are archived into the Discord. You can see them at any time. If you want to see specific things at any time, just send me a DM. I've probably got it. I've got it saved in a spreadsheet that I utilize, and I have them saved on my hard drive. So I journal and I annotate regularly, and it's incredibly important. Does anybody else have any other questions?
So just there's a question on the cost for this academy. Just to let you know about the pathway here. Just scroll down a bit further. There's FAQs down here that could probably answer your questions. But basically down in this area here, you apply. Okay, so but what you're applying for is the junior academy at that point. You're not in it. You're applying for it. And now there's a second step though. Just because you apply doesn't mean that you've started. What you need to do is then go into our Discord chat room, and there for the Bookmap Academy or Junior Academy applicants, you need to request a spreadsheet. So then this is why it's a two-step process. So then I know that you have signed up, and I know that you're part of our Discord room. That's where we're going to communicate, is in the Discord room, right? So and you need to get the spreadsheet in there. It was technically easier to just have you go in there and request it. So that's, you sign up first, and then you request your spreadsheet.
And if we want to go over to my side there, Bruce.
Yeah, sure.
Pull your window down. Can you see? There you go.
Yeah.
Yep. That's my spreadsheet. I archive my stuff every day. I archive it in my own personal way on offline, and then I also post all of these things in here. I think I'm mostly up to date. I'm a day off. That's on me. But all of these are in the Discord channels. You can see that I have different Discord channels for different posts. I post on Twitter, Reddit. You can see those. And what you're looking at is consistency. And that's what you need to do to be a successful trader, is you need this consistency. This is when I was also tracking my equities trading as well. It became a lot more tedious to duplicate that effort. So I just track futures right now for the most part. But that's what a spreadsheet should look like. And what Bruce really wants to see in the Blue Jacket Academy, if you want to join that, is that consistency. You don't necessarily need to be trading every day. That's not it. You just need to be, when you are trading, you need to be consistently actively journaling, documenting your process, putting yourself out there. And in putting yourself out there, you'll start to iterate on your process. You'll start to take feedback from other people or be able to converse about your trading style. And as you start being able to do those things, you'll start progressing. And that's one of the things that I use to leverage. Again, like I said, I wanted people to see my Bookmap trades so that they could tell me I was doing something wrong or I was doing something right. They could give me their influence on it. So those were techniques that I looked for importantly there. We did get a pullback. Like I said, that is not great. We came right back to the level though, and we kind of rejected higher there. It's kind of nice. Are there any other questions? Does anybody have anything else for me? I think that's just about everything.
That's it.
If you have questions, like I said, you can put them in. You can put them in the futures channel. You can put them in the general chat. Just ping me. Feel free. You can also DM me if you want. I'll answer those questions. I'm around often, so feel free to ask whatever you want. Bruce, I appreciate the time.
We appreciate it, Jack. Thank you very much. It's been excellent. So we'll continue on. We'll do it again.
Sounds great.
Yeah. So thanks everybody. And we will catch up another time.
Thanks, guys. Appreciate it. I'm going to continue my day. I got to balance a bunch of stuff. So you guys have a nice day.